All right, well, let's bring you details on what could be a mega GST reform. The big question, will there be more cash in your pocket? Let's consider the basic points and then bring you more details. Firstly, will GST 2.0's 5% and 18% rates give people more spending money? It's going to be down to just two rates now. Will 12% to 5% tax cuts help families buy essentials? Again, that's the goal. Will 40% so-called sin tax, I'll explain that, this targets tobacco and luxury cars, increase the cost of these items, discouraging their consumption while keeping essential goods affordable? That's the question. The revenue generated helps offset losses from lowering GST rates on other goods and supporting economic stimulus goals. That's the larger goal. Will 5.31 lakh crores boost? That's the boost. Will it make people spend more? That's what the assumption is. This will be a massive boost and it might fuel consumption. If it fuels consumption, then the losses incurred might actually be dealt with. Will a 20 to 25 point inflation drop help families with their costs? So those are the larger questions. Now let's try and spell it out for you. 5% and 18% rates, right? Now 90% of goods currently at 28% move to 18%, and many daily essentials drop from the existing 12% to 5%, thereby increasing people's spending power. Higher taxes on tobacco and luxury cars to keep essential goods affordable, that's a certain goal. The government makes, in a sense, revenue out of luxury goods and tobacco. They want to protect our health as well. And in doing this, in collecting more revenue there, they try and ensure that essential goods are affordable and remain that way. Lower rates and income tax cuts is a big goal. The total stimulus is 5.31 lakh crores. It aims to increase middle class spending and offsets the 50,000 crore revenue loss that will happen once this goes through, if it does. Now, opposition states want compensation for potential revenue losses from these changes. Will that take place? Now, minimal direct effect, but if insurance is classified as a luxury, then premiums could rise, impacting spending on policies. This is a concern, right? So when it comes to insurance, it shouldn't generally impact insurance or spending on policies, but there is a worry that premiums could rise, impacting spending on policies in certain cases. So there you have it, a broad look at what is expected, but there is a sense that if consumption goes up dramatically, it really kickstarts the economy to the next gear, thereby propelling growth.